In this video, we're going to look at an unconventional way for finding short-term support and resistance levels on SPY and SPX using Market Net Flow from Tradytics. So let's first walk through this chart to kind of get a sense of what we're actually looking at. First, the white line is the price of SPY, and you can see on the left we have the price axis, and this is we're looking at 3 days of data, but this is typically a 1 minute chart, and it might be aggregated to 2 minutes or so. But so we have a chart of SPY, and the green and red dotted lines are GEX levels that I have turned on. GEX levels can often act as support and resistance, and it's good to have these references. And I'm doing this video right after the recent Fed announcement, and I wanted to kind of highlight the GEX levels in addition to the options flow that we're seeing. So the other thing, the jagged red and green lines are the net premiums for all stocks for puts and calls. So as the red line goes up, that means the put premium is increasing, so there's puts being bought. And the green line is call premium, and as the green line goes up or down, that means calls are being bought or sold. So to start off the week, we were pretty choppy, but as we headed into pre-FOMC minutes, which came out on Wednesday, which is sort of the end of the chart here, the puts were starting to increase. We can see that the SPY chart was actually going down, so this kind of makes sense. There's some hedging going on. Now the hedging was enough to push SPY below the GEX levels, and we found support in the low 390 area, but then we quickly rallied back up as the call premium increased here. And up until the moment that the FOMC minutes came out, we were hovering above this GEX level, which is about 395, and that's approximately 3950 on the S&P 500. And we can see that this was sort of a previous level that we had been sort of holding. So we did get a little bit of a bear head fake, but it came back up, and then we traded sideways, as expected, into the actual announcement. And once the announcement came out that the Fed was, they did what they expected they were going to do, the market actually rallied, and we could see that the put premium started to come down and the call premium increased. The interesting part was the market actually rallied right up to the next GEX level, which is about 402.5. This is approximately 40.25 on SPX, and I've talked about this in other videos and podcasts that SPX often respects the quarter strikes, which would be in this case 4,025, 4,000, 39.75, 39.50, and we can see that the next higher GEX levels are going to be up around 407. So this is going to approximately be 40.75 on SPX. So right now we have about, let's call it a 100-point range in this SPX 100 points, which would be about 39.50 all the way up to 40.75, so maybe a little bit more. I'm expecting that these levels, the 39.75 level, to hold if we do pull back. And then what we'd want to see is what the option flow does. We kind of ended neutral for the week. Again, we're just looking at 3 days. But if we start to see the call premium pick up, then we can look to sell puts or put spreads underneath these levels, 39.50, 4,000, with a move up to 40.75 or so. At that point, we can see what the flow is doing. If the flow turns over and 40.75 is going to act as resistance, maybe we get to 4100. It's another big round number. We could look to maybe sell call spreads. So, and again, these are all short-term, 0-day, 1-day, 2-day type spreads. So this is an interesting, unconventional take on how to find support and resistance on SPY. So I hope that you found this useful. I'll put a link to Tradytics into the description. And thanks for the like, and we'll see you in the next video.